APTC is based on a guess. When someone enrolls in a marketplace plan, they estimate household income and family size. But real life happens. Income changes, jobs change, family changes. So the IRS makes you true up the advance payments you received with the premium tax credit you actually earned for the year. That true up process is called reconciliation. Reconciliation happens on Form 8962, Premium Tax Credit. On the EA exam, they love the filing requirement. If APTC was paid for the taxpayer, they must file a return and include Form 8962. If you e-file without it, the IRS will reject the return. That's not a maybe. It's a hard stop until the form is included. Here's the basic math. You compare two numbers: the advance credit paid during the year versus the premium tax credit allowed based on actual annual household income. If the allowed credit is higher, you get more credit on the return. If the allowed credit is lower, you have excess APTC and you may have to pay some or all of it back. The premium tax credit is refundable. That's a big deal. Refundable means it can increase your refund even if you owe zero income tax. So if the taxpayer qualifies for additional PTC after reconciliation, they can still get that amount paid out as a refund. On exam questions, watch for wording like no tax liability and don't automatically assume the credit is wasted. If there's excess APTC, it becomes a repayment on the return, and the IRS can collect it like a normal tax debt. Even though the old shared responsibility payment had collection limits, excess APTC does not. Think liens and levies if it goes unpaid. So from a compliance standpoint, excess APTC is serious, and it's tied directly to filing that Form 8962 correctly. Now the rule change. Starting in 2026, repayment limitations for excess advance premium tax credits are eliminated. Translation: if the taxpayer received too much APTC, they must repay the full excess amount when filing. On the EA exam, they may test this as a timing question: what happens before versus after 2026? So anchor the phrase repayment limitations eliminated starting 2026. Businesses that employ more than how many full-time equivalent employees are required to report to the IRS about the health insurance offered to their employees? The options you'll usually see are 10, 25, 50, or 100 full-time equivalent employees. Think about the ACA employer reporting threshold and pick the number. The correct answer is 50. Under the ACA employer reporting rules, employers with 50 or more full-time employees, including full-time equivalent employees, are subject to employer reporting requirements. A tempting wrong answer is 100, because it feels like a big employer number, but the tested threshold is 50. Danielle is single with no dependents. She enrolled in a marketplace plan for 2023 starting January 1st. On July 14th, she enlisted in the Army and became eligible for government-sponsored coverage, so she canceled her marketplace coverage at the end of July. For what period can Danielle claim the premium tax credit, assuming she meets all eligibility criteria? Consider the month-by-month coverage period. The correct answer is January through July. She had marketplace coverage through the end of July, so those months can qualify for the premium tax credit, assuming she otherwise meets the rules. A tempting wrong answer is January through June, but the facts say she kept coverage until the end of July.